Welcome to the Buffett Vault, where we cover the best alternative and unique investment opportunities and assets for 2025. Today we'll look at 7 stock picks for Trump tariff gains. The steel industry is expected to be a key focus in the tariff discussion, as it was during Trump's first term. Nucor Corp significantly benefited from the Trump administration's 2018 tariffs and is likely to do so again. With the Republicans controlling both houses of Congress, any policy that impacts the import of Chinese or Brazilian steel is likely to benefit Nucor. This is due to the importance of repairing national infrastructure, which Nucor is well positioned to support. NUE stock has declined 12.5% from its all-time high reached in April of 2024. If the tariff situation develops favorably, this could be an opportune time to invest in this dividend king stock. Analysts have a consensus price target of 190 for NUE, which implies a potential upside of 27% from the current price. Additionally, the stock offers a dividend yield of 1.45%. Nucor Corporation is a leading manufacturer and seller of steel and steel products. At number 2, we have TREX. The investment thesis for buying TREX Company Inc. is straightforward. If lumber prices rise due to tariffs, consumers will seek alternative decking materials. TREX is a global leader in wood alternative decking products, making it an attractive option in a Trump trade scenario. The U.S. decking and railing market is valued at $8 billion. TREX is a leading manufacturer and currently holds a 13% market share, which is expected to grow. Consumers are increasingly opting for wood alternatives, driven by factors such as low maintenance requirements, better resale value, and environmental considerations, rather than the rising cost of lumber. TREX is a part of the larger home improvement industry. The company believes that the remodeling activity will increase due to interest rate cuts. Even if the rate cuts are not as significant as some homeowners expect, the overall trend is favorable for TREX's business. The stock has risen nearly 6% despite reporting a year-over-year decline in revenue and earnings. Analysts appear to be reconsidering their previous sell-off recommendation made in April 2024. This bullish sentiment is reflected in the 79.94 consensus price target, which suggests a potential upside of 16%. Coming in at number 3, we have Carpenter Technology. One industry that could benefit from Trump's tariffs is 3D printing, as it allows companies to shorten their supply chains. A good example is Carpenter Technology Corp., a specialty materials company that supplies steel products and offers 3D printing and additive manufacturing services. Carpenter serves industries like defense and aerospace, which are experiencing significant growth. CRS stock has surged over 160% in 2024, but analysts have become more cautious after the company missed revenue targets in its October 2024 earnings report. However, the company has now reported year-over-year revenue growth for 8 consecutive quarters, suggesting its business remains strong despite the recent miss. The company reported its most profitable first quarter in the company's history for the 2025 fiscal year. The company operates in 2 segments: specialty alloy operations and performance engineered products. Carpenter's product offerings include titanium alloys, powder metals, stainless steels, and more. The automotive sector is expected to be heavily impacted by tariffs, which positions these 2 stocks nicely. The first is Carvana. The stock has surged 367% in 2024, making it one of the market's top performers. Carvana is benefiting from 2 key trends. One is new car prices remain unaffordable for many consumers, driving increased demand for used vehicles as a more accessible option. And 2, Carvana's e-commerce model allows customers to buy and sell cars without the hassle of traditional car buying processes, which investors view as insufficient and outdated. Carvana holds only about 1% of the $40 billion used car market, suggesting significant room for growth. Importantly, the stock's strong performance has correlated with robust year-over-year growth in both revenue and earnings. This momentum is expected to continue as the Federal Reserve likely maintains a dovish policy stance, furthering supports Carvana's upside potential. The company operates an e-commerce platform for buying and selling used cars in the United States. The platform allows customers to research and identify a vehicle, inspect the vehicle using the 360-degree imaging technology, and obtain finance and warranty coverage. Coming in at number 5, we have General Motors. General Motors is well positioned to benefit from the expected growth in the domestic auto industry. The Trump administration has made it a priority to protect U.S. automakers from foreign competition. This aims to make imported vehicles more expensive in the U.S. market, while also making it easier for GM to sell its vehicles in China and other countries. Despite industry challenges, GM has taken steps to optimize its inventory. This has allowed the company to be competitive in the popular truck and SUV segments, while advancing its EV and autonomous driving technology. GM stock has risen 53% in 2024, continuing the momentum that began in 2023. With a forward price-to-earnings ratio of 5.2, GM appears to offer a compelling value that investors may find attractive. Coming in at number 6, we have Intel. Intel Corp may seem like an unlikely beneficiary of the Trump tariffs. The stock has declined by more than 50% in 2024, with a significant drop following the company's third quarter earnings report, which showed a substantial miss on the bottom line. However, Intel was one of the recipients of the CHIPS Act, receiving an additional $3 billion to build 4 foundries in the United States. This brings the company's total award to $11.4 billion. The The new funding is expected to be available by the end of 2024. This influx of capital could not have come at a better time for Intel, as the company has several promising product launches scheduled for 2025 in addition to a deal with Amazon. While the stock carries risk, including the company's history of not meeting expectations, it may be worth watching for investors seeking a Made in America investment opportunity. The Trump administration's tariff policies are likely to disrupt the US dollar. Additionally, there's growing bipartisan concern about the sustainability of the national debt. These factors have contributed to a surge in the price of Bitcoin, making it one of the best performing asset classes in 2024 along with gold. While some investors may be hesitant to invest directly in cryptocurrency, Coinbase Global provides exposure to this sector. If Trump follows through on his promise to establish a national Bitcoin reserve, Coinbase can be an attractive investment option as one of the world's largest cryptocurrency exchanges. Coin stock has already seen a significant increase of over 86% in 2024. With much of that growth occurring since September, when the market began to anticipate a Trump victory. Notably, short interest in coin stock has declined by around 10% in the month ending November 19th, as more institutional investors are becoming buyers. So that's all I've got for today's video. Be sure to subscribe and check out mechanicstraders.com to begin fully automated passive income generation via our custom-coded and proprietary MT5 EA bot. We offer a complete all-in-one trading package to begin your portfolio compounding today with our MT5 system.